at Bernstein India joins us. Manas, hi, morning. Your report largely focuses on the fact that there is chatter on the street that commissions for insurance products are looking to be reduced. Do you think it could have a meaningful impact on the insurance penetration as much as the GST cut has had? And how much do you think this could benefit some of the insurance stocks as it reduces their burden?
So thanks for having me today. I think any potential changes in commissions will not likely bring about as much volume uptake as GST has brought in, because the cost to consumer might not go down as much. And therefore, I think this will bring in more people in the affordability track, but it may hurt volumes for distributors and for insurers if there are cuts. Deferrals might be a better way to approach the idea, but I think there is a sense that the regulator wants to bring down commissions and will do something about it in the near future. That I think is what the report talks about.
And Manas, you're suggesting that that's not fully priced into stock prices, and therefore, what does that mean in terms of the moves with regard to how the returns or the moves on stock prices could shape up?
So essentially what we are talking about is the impact if something like this is implemented is large and stock prices are not reflecting that. So either the street thinks that this is not going to happen, or if this happens, then the street will get probably caught off guard and prices will have to then suddenly react to those news items. So I think that is how I would say.
Manas, if you look at general insurance there, the motor TP rates have been has been increasing on a very slow pace. Do you see a bigger increase happening in this year?
I will have to decline a comment. I don't cover general insurers, and for that reason, I cannot comment. But you're right, media has been talking about it, but it's not come through.
Manas, with regard to insurance itself, what's the kind of traction that you expect to see from Q3? Because you've got now the full impact of the GST rate cut, which will likely translate in Q3. Do you believe that there's going to be sharp uptick with regard to growth, and who will the winners be?
Yeah, so I think we already have monthly numbers coming in from insurers, and we've seen strong momentum on health. I think the term plan momentum does not show up because term plan is a small part of overall APE growth for life insurers. But then if you see number of policies sold and sum assured, you see that momentum over there as well. Channel checks also indicate that momentum on both term and health, mainly protection products, is good. Your product level profitability has come down, and therefore take rates may come down a bit. But then the volume, I think, will be more than enough to cover up any drain on revenues or on bottom lines for Q3. And which is why I think insurer stocks have been doing well. I think Policybazaar is the only listed distributor, and because of potential commission regulations, the stock has been under a bit of pressure. I do expect Q3 fundamentally to be strong even for Policybazaar.
Right, okay. But Manas, talking about this commission cut, if it does end up going through, it is going to be negative for distributors, right? What is your take over there?
So if something is to happen, one, we don't know what is the modality, how much of a cut or a deferral we are talking about. So hard to talk numbers, but yes, directionally, it will hurt distributors. If it is a deep cut, it will also hurt insurers in terms of volume growth, is my view. I do believe that the regulator will take feedback from the industry, and commissions are where they are because the product needs a push and an incentive for distributors. So I think that discussion and where that consultation paper lands up will shape opinion. If there is a cut without adequate enough volume uptick, then yes, Policybazaar's top line will see some pressure, and the bottom line is somewhat sensitive to top line changes. So that is what I do want to highlight to investors in terms of potential commission regulations.
Manas, there's one more thing which is coming in as a headwind for this sector is Bima Sugam. That's a portal initiated by the regulator himself. which consolidates and allows you to buy and buy all the policies, whether it's life or health or any other. Do you see that as a big challenge going forward for Policybazaar?
I don't necessarily think Bima Sugam is gonna become a big challenge for Policybazaar in the near term. Insurance is a complicated product where you need people to handhold you during the process of sale and even after sale. So in a setup like Bima Sugam, where you're allowing people to compare prices, the prices may be lower because there's no commission. But then, without a commission, you can't have a handholding or a call center setup to ensure sales get closed and after sale servicing is done. So I think with that context, I think I am less worried about Bima Sugam. Obviously, if it does start to scale up ahead of my expectations and it becomes a big marketplace, then yes, it does pose a challenge, but that is not my base case with Policybazaar.
Didn't we see this kind of thing happening in the mutual fund, where mutual funds started the direct approach for subscribing to mutual fund units, and eventually now they have a larger percentage of the entire sales, monthly sales, coming from direct route?
You're right. It has worked in mutual funds. I do think insurance is a far more complicated product than mutual funds. And therefore, I am not very sure if I would expect such a strong outcome. Even for mutual funds, the success of direct plans have existed since 2014. Uh, it only picked up after these new age broker apps, so as to say, started distributing mutual funds through a digital platform. So I would be cautious on projecting what's worked with mutual funds in the recent years onto Bima Sugam. If something of that sort is to happen, then yes, the penetration story for the product becomes better, and Policybazaar will have to fight for market share, which practically it's not had to in the past because it's a near monopoly in online insurance distribution, especially when it comes to protection products.
Manas, given the evolving environment, the best way to play insurance, in your opinion, from within your coverage universe?
I think generally I like distributors over the insurers, but at this point in time, given the regulatory possibilities and where valuations are, I think I would still play life insurers over distributors. I think Q3, Q4 momentum fundamentally will be strong for all players within my coverage. And to be clear, I cover life insurers and Policybazaar within the insurance pack at this point in time. I like Max. I like SBI Life. I think I don't have a problem with people buying into HDFC Life. ICICI and LIC, I would like to see uh, more indications that top line momentum is going to improve, and that is how I would paint that picture on the life insurance side.
Perfect. Thank you so much for that, Manas. It's been a good conversation, and thank you for staying back very patiently and speaking with us.
Thank you.